All right, greetings, everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely check out the website at cubicleinvesting.com. All right, guys. So today is it's Tuesday. It's March the 19th. It's approximately 5:45 a.m. Eastern Standard Time. Yeah, I get up pretty early, guys. Yeah, so I just want to pull up my pointer here. So as you can see here, here's the time. So I'm actually in a trade that I put on yesterday. We look at the futures market, right? We can see that the E mini futures contract for the S&P 500 is down slightly by 9 points. So I always look at this when I first wake up in the morning and log onto my computer. I always check the what the futures market is doing because it's a good indication of where the SPX is going to open up, or what it's going to do actually when the market opens at 9:30 a.m. Eastern Standard Time. So I'm actually in a trade right now on the SPX that I put on yesterday. So essentially a 1 DTE trade, not a 0 DTE trade. So as you can see here, I sold the 52.25 and I bought the 52.30. I tried to put on more contracts here, but they only filled me for one. But nonetheless, that's fine. I decided to go on the call side because why? So one of the things I always stress to the members of my online trading course is that you got to be mindful. You got to be a mindful trader. In other words, you have to understand, or you have to be aware of what news is on the horizon, particularly if you're going to put on a trade that goes beyond 0 DTE. So if you're looking to do a 1 DTE, 2 DTE, so on and so forth, you definitely want to check the news that's on the horizon or that's coming out prior to you putting on that trade, because the news affects how the SPX moves, right, from day to day. And so considering that we have the FOMC meeting taking place on March the 20th, which is tomorrow, Wednesday. The Federal Open Market Committee meeting taking place, March the 20th. Yeah, I don't see, normally the SPX does not move rather significantly a day prior to that FOMC meeting, right? And so it just made sense to go on the call side because we're already the SPX made a all-time high back. Let me just do a 1 month, 1 day. So as you can see here, so the all-time high right now for the SPX or the S&P 500 is 51.89 and some change, right? So the fact that yesterday when the market opened, go back to 5 minutes. So yesterday when the market opened, so this here is the price action for yesterday. You can see here that right out of the gate at 9:30, the market shot up and it was immediately in overbought territory as it pertains to the relative strength index, right? And also it was significantly outside of the Bollinger Bands. And this was yesterday, so 2 days before the Fed meets, this thing had a major breakout. And so essentially what I did was I just recognized that, and I know that just from watching, primarily being a 0 DTE SPX trader, I know that the SPX does not move rather significantly, 2 days or a day before the Fed meets. And the fact that it had made this significant run up, I just said, hey, let me just go on the call side, right? Because 51.89 is the all-time high thus far. I don't see the SPX making another all-time high 2 days before the Fed meets, right? And so it just made sense to do a one DTE, go on the call side, and I tried to get, like I said, I tried to get filled for more contracts, but nonetheless, that's okay. But this is pretty much money in the bank. As I just mentioned, we can see that the futures contract or the futures market for the ES mini is already showing, a downward trend. So when the market opens, at least right now as it stands, the SPX will definitely be down. So that's one thing you guys want to keep in mind is that the SPX um, uh, does not move that much, or is not very erratic in its movement and its behavior prior to a day or two before the FOMC meets, right? But nonetheless, it did have that strong breakout yesterday, and so again, it just made sense to go on the call side. But I'll keep you guys up to date as to how this trade manifests throughout today's trading session. So I'll come back and give you guys an update. All right, I'm back, guys. So we have approximately, let me pull up my pointer here. We have approximately 30 seconds before the market opens, right? So I want to show you guys, so you can actually see here from the first video segment I did that the ES mini is still down 9.5 points. So when the market opens, right, the SPX should drop immediately down to a lower value, right? And just in case you guys didn't know, you can actually switch these strike prices, but nonetheless, I like to keep them the default way. All right, so the market just opened. So as you can see, the SPX has dropped down, right? So it's down by a little over 8 points. If we look at my position here, so as we can see here, so I took in $325 for that SPX 1 DTE position. As you can see right now, I'm at pretty much 1%, right? So yeah, so I think that considering that the FOMC meeting is tomorrow, the market is probably going to stay down today, meaning that it's going to end at a lower value versus yesterday's close. So yeah, so it's it's going to be a pretty easy trading day. I will probably, so here's my positions here with respect to the price of SPX. So although anything could happen throughout the day, right? But nonetheless, I think because of the uncertainty of what the Fed is going to say tomorrow, although if we look at, let me just show you guys right. If we look at the CME Fed Watch tool, the market, pull this over. So the market is pretty much, so 99% of the market participants, if you will, who participate in this CME Fed Watch tool, 99% are speculating that the target rate is going to stay the same. So as you can see here, 99% are saying that the current rate, which is 525 to 550 basis points, is going to stay the same. And then you have a really small contingent of people, 1%, who think that the Fed is actually going to decrease or cut the current interest rate from this rate or these rates or this rate range to this rate range here. But that's not going to happen. But nonetheless, there's still some uncertainty. So with that uncertainty being there, the SPX is going to probably stay down and will probably trade in a tight range after all of this volatility that normally takes place within the first 30 minutes of the market opening. I'll come back and give you guys an update later on today with regard to how my positions are doing. I'm probably just going to leave them on, let them expire worthless, out of the money. All right, guys, I'm back. Let me pull up my pointer real quick. So yeah, as you can see here, so it is 10:24. It is 10:24, and so yeah, as you can see here, the SPX is pretty much moving sideways. As I mentioned before, I'm just going to allow my positions to expire worthless, and I'm probably going to put on another position on the put side if the SPX should drop below my 20 points below the opening price, right? So I'm always looking to put on a trade when after the SPX has made a 20-point move above or below the opening price. So I always mark those price points off every day on my chart. And also, if we look at the amount of volume that's coming to the market, it's not significant. It's not going up. It's actually going down. And if we look at the $ ADD, which I call the crowd, it's actually, the number of stocks or the number of issues that are advancing minus the number of issues or stocks that are declining. It's actually in a positive right now. But nonetheless, if we look at the XLK sector, which is the technology sector, which is the largest sector of the S&P 500 that has the most influence on how the SPX moves, we can see that take a look at the overall sector itself. We can see that the overall sector itself is down a little over 0.5%. And so that's going to weigh on the SPX as well. Although we can see it kind of starting to run up. Nonetheless, I don't think it's going to run up, too significantly throughout the day. But you will get these spikes. As you can see right now, it's down close to 10 points. We get in a slight run up here, but it's nothing significant. Now, what a lot of folks do, actually look, they look at the first 15 minutes of the price action for the SPX, and then when and they look at the high and low of that first 15-minute window, and when the SPX breaks out of that 15-minute window, then folks will either put on go on the call side or the put side. But from my perspective, that 15-minute window, price action window, the high and low of the SPX, is normally the range is too tight for me. So I prefer to wait for a 20-point move above or below the opening price before I look to put on a trade. But again, this trade that I put on today is from yesterday, because the SPX had made a run up. It made a pretty substantial run up yesterday, and knowing that again the Fed is going to meet tomorrow, I pretty safe position to be in on the call side. All right, guys, I'm back. So it is 11:33 a.m. As you can see here, the SPX is in overbought territory on the RSI, and as you can see here, it's pumping. It's slightly on the outside of the upper Bollinger Band. And is actually in positive territory now. I'm rather surprised by, but nonetheless, I don't think it's going to do much today. Again, the XLK is still in the red, but it's less in the red than it was before. So it's less down than it was before. So it's actually going up, but nonetheless, we can see here that the SPX is pumping a little bit, slightly. But as it relates to my position, I'm still not concerned, so I don't have any concern. As you can see here, here's the expected move for the rest of the day. This brown bar on the platform corresponds to this plus or minus 13 and some change. So you essentially look at the current value, and you add and subtract this number here, and you get this brown bar, right? So that's the expected move. But our rank is pretty high, so it's above 20, which is favorable to us option sellers. So that's not a big deal because we can get more credit while being able to put more space between our position and also the SPX. So yeah, it's pumping a bit. As you can see, it's starting to come down. So normally when you see SPX in this overbought territory, let me change the color. On my pointer here. Yeah, so as you can see here, it's in overbought territory, so it'll eventually start to come back down, and it'll probably come down and as we get closer to the expiration, which is 4 o'clock today. So yes, I'll come back and give you guys another update. Again, I haven't decided if I'm going to go on the put side yet, so still thinking about that. Maybe going to 51.15. We look at the high of today at 51.53 thus far. So I would rather be at 51. I would rather be here, but I would like to get at least a $20 credit. So hopefully, the SPX can drop a little bit more, but I would feel safer at that 5100, maybe 5105 level. Just because I'm always concerned about the possibility of the SPX dropping, particularly in the last 30 minutes of the trading session, right? The last minute of the last minute of the trading session, the SPX can move rather erratically because of gamma. Gamma expands as we get close to the expiration date. But yeah. So I'll come back and give you guys maybe one last update. All right, guys, I'm back. So it is 3:11 p.m. Eastern Standard Time. So we have less than 60 minutes before the market closes. So to show you guys my position, so as you can see here, my positions are far out of the money. So that's pretty much money in the bank for today. So I'll be walking away with the credit. And as I mentioned before, I was looking or considering putting on a position for today on the put side, but considering that the SPX has run up past my 20-point mark above the opening price, I decided to actually go out to March the 25th, which is Monday, and put on a vertical call credit spread at 53.10 and 53.20. The fact that the SPX's all-time high is 51.89. We have the FOMC meeting on Wednesday, which will probably be, the market is just going to be looking for any signs of when the Fed might reduce the interest rate, but they're going to keep it as it is, I'm sure, on Wednesday. So I don't expect the market to run up, but so much, although anything could happen. But nonetheless, I don't foresee, the probability of the SPX actually, considering that the all-time high right now is 51.89, it has not even hit the 5,200 level yet. I'm in the 5,300 level, and these whole numbers are kind of like psychological levels for the market. So 5,200 is a significant level for the SPX to reach, right? So it's highly improbable that the SPX will reach the 5,300 level by Monday. So, pretty much it's a high probability trade. So I decided to go out to Monday, and so I'll probably trade around this. I'm not going to probably trade tomorrow because, again, I don't like to trade when the Fed is having their meeting, but I will definitely be trading on Thursday and also Friday. And so trading around this position here and just bringing in extra credit. So hopefully you guys learned something. If you have not already, please subscribe to the channel and also like the channel, like the video, please. Thank you.